Well, let's just check in on the Kenyan markets and what we're seeing on this Thursday trading session. Just about 5,000 points, so still closing above that key psychological level of 5,000. But you're looking at a drawback there of 0.75%. Looking at some of the stocks that were moving today, banks once again coming to the fore when it comes to most volume moving through the market, accounting for the most of the volume, the likes of equity and KCB. Big gainers on the day. KCB saying today at a summit that they're looking to target SMMEs. That's for lending growth. And then Safaricom also coming through with a nice rally on the day. So those stocks certainly are coming through with some positive gains there. And Safaricom, that stock price hovering near a 5-year high. So lots of optimism around it. You saw the currency up on the board. there. In the meantime, let's just cross over and check in on how the fixed income market has fared this week so far. We've got our market watcher standing by from our Nairobi studios, Kenneth Minjire, fixed income analyst at Stanlib, Kenya. Kenneth, thanks so much for joining us. So give us an idea of what interest rates have done, yields have done post the decision by the Supreme Court to uphold Uhuru Kenyatta, of course, as the president, and of course now he's officially been sworn in.
Yes, it's been quite interesting. I think, as expected, the first reaction we saw was from the equity market, but in the fixed income space, we've also seen quite a bit of, I'd call it cautious optimism. There's some issues, some papers, especially the infrastructure bonds, which we've seen them rally down quite a bit. They've come off by 30 to about 50 basis points. The infrastructure bonds are usually quite popular because of the tax exemption element they have. So we've seen quite a rally in this, but also on other counters, on other tenors, we've seen quite a bit of interest. That is 5-10 year, which actually indicates that investors are actually now willing to take longer term risk. What we were seeing previously was where they only wanted to, they were quite risk averse, so they only were willing to take short-term risk. That is 91 to about 2 years, where we saw most of the activity. But now we're seeing them looking at longer tenors. We've seen quite a bit of demand coming in for the 10-year paper, the 5-year, and the 15-year paper. And in the upcoming auction, where they're planning to reopen a 15-year paper, we expect a lot of subscriptions to come into this.
Yeah. Let's just look at the effect of the currency right now. And of course, currency strength is what we're looking at, because the shilling trading at near 7-month highs. And it seems that there is so much optimism right now. Is currency strength also being supportive of fixed income assets?
Yes, actually, it is. And also, you do know that the central bank has been quite active in the market, mopping up shillings quite aggressively. They've been coming in to mop up 15 billion. They've not mopped up anything less than 15 billion in the last, I'd say, 7 to 10 days. So this has also played a part in supporting the shilling. Mm-hmm. But what we're seeing now is, despite the mop up, where in other circumstances you'd expect that we'd see long-term rates begin to rise because of the demand for money by the central bank. What we're seeing now is the rates are actually moving in the opposite direction. We've seen the 182-day come off, the 364-day come off 2 weeks consecutively. Mm-hmm. So this indicates that, market sentiment is very positive, despite CBK putting upward pressure on the yields. We're still seeing them coming off. So there's a lot of liquidity. Market is positive. People are willing to chase these yields, and we do expect them to continue coming off.
Yeah. Let's look at how growth is going to pan out this year, and what people are pricing in when it comes to that. Because, you've had good rain so far in Kenya. There's been, of course, this drop in inflation, which appears to have stabilized. The inflation rate has stabilized. You've got a currency that's certainly strong right now. And, of course, a lot of interest in the equity market, a lot of interest in the bond market. So a lot of positivity right now. But is that going to all translate into a good growth figure overall when you're looking at GDP forecasts?
Yes, I actually think it will. Of course, we will feel a bit of an effect from the first quarter, which is quite slow. The economy as a whole had slowed down because of the whole anticipation of the election process and people are quite not sure of how it would turn out. But I think the next 3 quarters we will see quite a bit of growth. And looking at the policies that the new government is putting in place, we expect much more government expenditure, and we hope this will actually continue to drive the market. If interest rates continue moving in the direction they are, we expect this also to have an impact on commercial lending rates. Thus, we may see credit growth begin to increase. But unlike previously, where of course inflation was a threat and also the shilling, I think this year what we expect that inflation will stabilize for most of the year. And as you've mentioned, we've had good rainfall. This is one of the this season is actually where we get most of the rainfall. So we've had quite a bit of rainfall. This is actually good. And going forward, I actually don't foresee some of the pressures we saw in 2010, 2011, especially if you look also at global fuel prices. They're quite stable, and they expect to remain stable for the rest of the year. Yeah. So some of the pressures we saw in 2011 are not there. So we do expect growth. We may even surpass the growth targets and expectations of between 5 to 5.5.
Let's just go back to the bond market and look at government's borrowing requirements for this year, because raising their borrowing requirements by 27 billion shillings. Are you concerned about that? Because other traders and analysts are basically saying that that is going to be focused on infrastructure, focused on growth projects. So they're not concerned around that, and they certainly see the market able to support that borrowing program. Are you of the same view, or would you be a little bit concerned?
No, not really. I think the market has sufficient liquidity to actually fund the increase of 27 billion, which has set the target now to about 165 billion for this financial year. I mean, the market is sufficiently liquid. If you look at the subscriptions we're seeing on the T-bills and in the repo market, and also in the bond auctions, there is more than enough liquidity to fund these positions. The money, I would not say, is actually going directly into infrastructure at the moment. It was just a last-minute supplementary budget to basically fund some of the goals that the new government has set in place to accomplish within the first 100 days of office. So this supplementary budget is actually supposed to go up till the end of the financial year. But I don't think there'll be much of an impact on interest rates. I don't think the demand for money by Treasury will crowd out the private sector. As I mentioned, we may start to feel a decline in commercial lending rates, which in line with a drop in interest rates. I
mean, just looking at all the positivity right now is regarding getting exposure to Kenya through either equities and bonds right now. Do you think that Uhuru Kenyatta and the new regime should be focused on further development, specifically on the bond market side, to help foreign investors get further exposure, to help develop the bond market, fixed income market further right now?
I think there are a lot of actually processes ongoing at the moment by our Capital Markets Authority and also the central bank and the Nairobi Securities Exchange to put some of these put some of these measures in place to actually encourage more foreign investment in our market. It's been growing since about, I think, I'd say 2006. We've seen a lot of foreign participation in our market, and they're actually putting in line some of these things such as primary dealership, market makers. These are all things that deepen a market and also attract foreign investors. Like, for example, in 2013, I think we've seen about 20 to 30% foreign participation in our fixed income market. So I mean, we expect this just to grow in leaps and bounds as some of these processes just awaiting gazettement by the Ministry of Finance. So I think by the end of this year, we should see a lot of developments in our fixed income market.